Happy Monday, everybody. I hope you had a great Thanksgiving and a great weekend. Today is December 2nd, 2024, and as we start December and the final run for this year, this is your Monday market update. There's a lot going on as we come to the end of the year. Before we do, let's recap last week's market action, then we'll preview this week. Now, before I get into that, tomorrow, Tuesday, is Giving Tuesday. Giving Tuesday is a reminder of the importance of kindness and generosity, especially during the holiday season. It inspires people to think beyond themselves and contribute to well-being of others. Of course, it follows Black Friday and Cyber Monday, now in its 22nd year and in over 80 countries. So maybe in addition to everything else you do, think about Giving Tuesday. All right, stocks opened strongly on Monday with the S&P 500 hitting fresh intraday record highs, supported by optimism surrounding President-elect Trump's selection of Scott Bessent as Treasury Secretary. The market interpreted this pick as a stable and growth-focused choice, resulting in early gains. There was nothing to keep markets from going up, so the rally lost steam by to keep the markets going up. And so the rally did lose steam by midday as some investors booked some profits. By the end of the session, the Dow was up 1%, S&P up about a third of 1%, the NASDAQ up just about a quarter of 1%. The big winner was the small caps. The Russell 2000 was up 1.5% as investors interpreted the Bessent appointment as a move towards potential easier borrowing costs, benefiting smaller companies. Market extended their gains on Tuesday despite new tariff threats from President-elect targeting Canada, Mexico, and China. Investors appeared to ignore these threats, seeing them as unlikely to materialize based on historical precedents. I'll add that markets are, first of all, thin due to the holiday, but also the market still has the rainbows and unicorns idea. Good news is good news, and bad news as well, either good news or not important at all. The release of FOMC minutes highlighted continued support for gradual rate cuts in 2025, further bolstering sentiment. By the end of the day, the Dow was up a third of 1%, S&P up 2/3 of 1%, and at another record high, and the NASDAQ was also up about 2/3 of 1%. Wednesday, we saw markets open slightly lower as Dell and HP disappointed with earnings and guidance. Eco data was pretty perfect, and that helped to stabilize a low-volume market. By the end of the day, markets and trading desks pretty much thinned out. The Dow closed down about a third of 1%, S&P down a third of 1%, and the NASDAQ was down about 2/3 of 1%. Markets, of course, were closed on Thursday for Thanksgiving. Friday was a short day with market closing half a day. In case you're wondering why we bother to open markets for a half day, here's your useless information for the day. In the early 1930s, the financial crisis shut the stock market down for days, and exchanges didn't tell investors when it would reopen. Economic historian John Steele Gordon said a federal law passed several years later so that this wouldn't happen again. The stock exchange is forbidden to close more than 3 consecutive days, he said. That's why markets are generally open on Friday holidays. An exception was made following when? The 9/11 attacks. And since Thanksgiving gets a half day, markets added the day before July 4th and the day before Christmas also. So that's why we have a short trading day. That did not stop markets from setting new highs, or really probably contributed why we set new highs. Volume on a short day after Thanksgiving rivals Yom Kippur for the slowest volume day of the year. The market started off higher and really didn't look back, even in the short session. Notable movers: Tesla which is now up 33% since the election. Warren Buffett's Berkshire Hathaway up 33% on the year, better than the S&P 500 at a new closing high. Buffett shared some interesting information in his most recent letter. Stand by for Friday's videos for some recaps of that. Chip stocks were up on the news that the Biden sanctions on China may be less strict than previously proposed. We even had retail moving as Walmart was an new all-time high on Black Friday. But by the end of the day, there was a low volume but wide move higher across markets, day, week, month, all looking good. For Friday, the Dow and the S&P were each up about 0.5%. The NASDAQ was up about 0.75 of 1%. For the week, the Dow was up almost 1.5%. S&P and NASDAQ was each up about 1%. For the month, the Dow was up 7.5%. S&P up 5%. The NASDAQ up 6%. The Dow and the S&P hitting their best month of the year. Market calls are all over the place from melt up to melt down. So again, stick with your goals and your plans. From the stats that can tell you what you want them to tell you department, how about this headline? No market correction yet in 2024. And on average, since 1928, the S&P has corrected 10% or more every 346 days. Enough to scare you? Note that half of the yearly periods since 2000 have not had a pullback of this level. Again, read it how you want to read it. As we move into the end of the year, a few items to note. First, we have only a few weeks until the next Fed meeting, December 18th. And of course, that will be watched, though I maintain that valuations and geopolitics are going to drive this longer term. Some things I'll be watching for any signs that consumers are getting further stretched. We know that there are 5 less days between Thanksgiving and Christmas, shopping days between Thanksgiving and Christmas this year, and that will be a news story. We also have a later Hanukkah this year. So add that to the fact that as of last month, U.S. consumer credit card debt has reached a record high of $1.17 trillion, marking a $24 billion increase in just the third quarter. Despite this rise, the rate of credit card delinquencies has slightly decreased for the first time in 3 years, with 8.8% of debt becoming delinquent, down from over 9%. This improvement does suggest that easing inflation is helping consumers manage debt better. So next week, we'll get a bunch of eco and labor numbers. This week, we're going to get a bunch of eco and labor numbers, leading to the big government numbers on Friday. In between, we'll hear about manufacturing, construction. Speaking of that, interesting to see that in September, infrastructure spending on transportation projects like railroads grew 7% from last year, and manufacturing construction spend hit $235 billion, a 20% surge. That's coming from the government dollars, mostly with the CHIPS Act and the infrastructure law. We'll also get ADP and jobless numbers and the Beige Book, and quite a few Fed heads. Powell will be the big one. Also Waller, Williams, Musalem, Hammock, Daly, and Goolsbee. And we'll have a pretty busy week in that. So there will be a few earnings, but most eyes are going to be on Friday's jobs report. Just remember that this market seems to be priced for perfection. Price that everything can go right will. And what will the next catalyst be for the short term? That's the question. So we'll see what happens on Friday with the jobs number. That is the big number that everyone's watching. In the meantime, as I mentioned, stay true to your goals and your plans. We're doing risk audits in all of our meetings, so let's talk soon. Have a great week.